Hi there, my name is Allison Anders, and I just graduated from college 1 year ago. Cinema arts. Yay me! Sorry. Okay, I'm not looking to waste your time. Do you know we've been labeled Generation Debt just because we have to go into so much debt to get a college degree? Previous generations did not have to do it like this. And they didn't have credit cards available all over campus. It's like we've been stuck with the bill, and that's why I'm making this project. I don't want you to get debt slapped. How do you get debt slapped? You are debt slapped when your college experience suffers. Your grades, your fun, your options. You're also debt slapped when you take on so much debt that you're setting yourself up for real drama after school. Just so you know, I'm not anti-student loan or anti-credit card. I just want you to know what's up, so that you can make fully informed decisions. Otherwise, you're making somebody rich, and it won't be you.
Well, I think first of all, it's pretty ridiculous considering that a lot of kids here, they don't have jobs, so they're automatically they're trying to sell debt to these people in hopes that later on they can reap profits from them.
Well, there's a lot of marketing, especially right at the beginning of the year. They're giving away free T-shirts, or you can get $50 gift card or whatever.
You know, when you're buying stuff online.
All that. So I don't know how to get my information.
I walk up there and I'm like, hey, is that a free Frisbee? And they give you one thing, like a free blanket or a free pillow or something, and then they send you stuff for the next year and a half.
Did you know millions of dollars are spent on market research to get to know you?
U.S. college students spend over $50 billion a year on entertainment. It's a gold mine. It's an oil reserve. It's an old-growth forest.
We are the most marketed to group in the history of the world.
According to the Frontline Report, The Merchants of Cool, a typical American teenager processes 3,000 discrete advertising messages a day. An 18-year-old would have already watched 10 million discrete advertising messages in his or her lifetime. And beyond that, young adults consume massive quantities of entertainment media.
All this marketing, advertising, and entertainment media promotes a certain lifestyle. A lifestyle of conspicuous consumption. Consume, buy it now, live for today. I mean, think about it. How much of our media tells us to buy less?
We've transformed from a producing or manufacturing economy to an economy of consumption. We've moved from the factories to the malls.
And into this economy based on consumption and culture of consuming, credit cards and student loans step in. Live for today and use your student loans or credit cards to do it.
Everywhere I went, credit cards. Credit cards were everywhere. I mean, I couldn't walk across campus without somebody coming up offering me a free T-shirt to sign up for their credit card. And that free T-shirt cost me thousands of dollars.
Brian's talking about tabling, which is normally done by student organizations. Recently, credit card companies have started using the practice as well. But instead of staffing the table with a credit card representative, they use your fellow students.
You buy something at the bookstore, it places an advertisement in your bag. That's how I signed up for my first one. I needed to buy a computer, so I signed up for a credit card. Got a $1,000 computer.
Because I had a credit card to my name, and I kept getting these things, and I was like, wait a second, they told me that this wouldn't, activate, but it did.
Here's an analogy. Having a lot of debt is like getting ready for a race and then shooting yourself in the foot right before you start.
I'd love to say, worry about your debt later when you're established and you have a job, but I can't, because by then the damage might be already done.
So it was near the end of the quarter, and I ran out of money. So I used my credit card, the one I got the computer with, and the debt kind of grew, and I ran out of money again. My financial aid wasn't enough, and I was overspending. I started living off my credit card, and I didn't really keep track, so I had to get another credit card to pay off the first.
The students I talk to know about short-term gains turning into long-term losses. But what they don't know is that this can happen a lot sooner than expected.
It is in your best interest to set your own limit. If you let them set your limit, you may get in way over your head and end up paying them a lot of money.
Taking a year off, I'm living at home, working to pay it off. I hope I can do it in a year. I just think of all the people at school having fun, and I thought the credit cards let me have more fun, but here I am.
1 out of 10 students will not graduate college because of credit card debt. And when I talk to groups, I say, look around, and 1 out of every 10 students here will not graduate simply because of credit card debt.
They're like a shovel to like dig a hole in your future with.
And then they have financial incentives. If I can get a friend to open a checking account, then we both get $25 from the bank.
Or they like talked me into getting a college account, and it just ended up screwing me over, so I had to close it and then open an account in another bank because they wouldn't leave me alone. But that didn't work as far as paying for school, so whatever.
Because of the economy, we're facing unique pressures, and the rules of the game have vastly changed.
Going into debt to get a college degree has not always been the case. In her book, Strapped, Tamara Drott wrote that in 1977, students spent $6 billion to get a college education compared to the $28 billion that students spent in 1993. By 2003, the amount of borrowing had doubled to $56 billion. And the increase cannot be explained away by higher student enrollment, though the number of students enrolled in college did grow by 44% between 1977 and 2003. The student loan volume rose by 833%. The increases can be explained by the rising cost of a college education and worse student aid packages.
College education has been called a luxury price necessity. It is the fastest rising consumer good and has nearly doubled in price in the last decade. To make matters worse, student aid packages have seen a decline in government-backed grants and subsidized loans. This means that more students have to take out more expensive loans from private lenders.
Society has seen a debt explosion as well.
At least 2 things happened to contribute to the debt explosion. First, the lending industry was deregulated. In a nutshell, some of the regulations were taken away from lenders, which unleashed more loans from larger banks with higher interest rates and fees, and eventually 5.1 billion credit card solicitations. These changes gave unprecedented profits to lenders, including the monthly profit of $2.5 billion that the credit card industry sees.
The cost of basic expenses, housing, healthcare, education, transportation, have increased. And since the 1970s, incomes have decreased or stayed the same. During the 1950s to the 1970s, people made more in relation to the cost of basic expenses.
These rising costs make it easier for us to run out of money while we're in college, and also harder to pay off debt after graduation.
Yeah, I did my undergrad at Stanford, and you know, I was really inundated with a lot of materials that came a lot through the mail. And you know, I was kind of naive about it at the time, so I ended up signing up with one of the first credit card offers that I got. You know, which was kind of branded with the name of the Alumni Association, so it's kind of like it must be good, right? You know, I didn't have too many problems until later. It was really later that ended up happening.
There are lots of ways to borrow money: a credit card, a loan, or financing a purchase. When you borrow money, you create debt, which you have to pay back. First, you pay back the debt, and then you pay for having borrowed the money. This is different than paying with cash, a check, or your debit card, which is connected to your bank account. With these payment methods, you don't have to pay for having borrowed money, which is cheaper.
Let's say Brian has $5,800 in credit card debt with a 27.99 APR, which is pretty high. If he pays a minimum payment, it will take him over 27 years, and he'll pay out over $25,000 just to pay off that $5,800. And that assumes that he doesn't buy anything else or have his interest rate increase or receive late or over the credit limit fees.
Today's undergraduate college student graduates with about $20,000 worth of student loan debt. Graduate students have about $45,000 worth of debt. Those that go to community college accrue about $8,700 worth of debt.
If you have $23,000 in federal student loan debt at 6.8% APR and you choose the 25-year repayment plan, you will pay out $47,892. I'll say that again. $23,000 in student loans, 6.8% APR, the 25-year repayment plan, you end up paying $47,892 to pay off your $23,000 loan. That's assuming your loans are through your financial aid package and are government-backed. Private student loans outside of your financial aid package can come with a higher interest rate and fees and thereby cost you a lot more.
It costs money to borrow. But what are those costs? One of the costs is interest.
Interest is a percentage added on to what you owe. The annual percentage rate, or APR, is a percentage cost of credit and loans on a yearly basis.
APR is key for comparing costs. When you borrow money, you want the APR to be lower because that will be less money that will be added on to your debt.
Even a small change in interest can make a huge difference. Another cost for credit or loans are fees. Fees are added to your loan for a service. Now, some fees are necessary and some might be overpriced or not necessary.
Here's a credit card offer one of my former students received. It's for a credit card with a limit of up to $1,000. A credit limit is the amount of money that you can borrow on the card. Anytime you read the words as low as or up to, it means that you may not get the best interest rate or credit limit. So the student received a card with a $350 credit limit. It had 4 fees: an origination fee, processing fee, a membership fee, and an annual fee. Now each fee was $50, so that means there's a total of $200 in fees on a card with a $350 credit limit. Insult to injury, those $200 in fees were subtracted from his $350 credit limit. So then he was left with a new credit limit of only $150. Well, he didn't know it worked like that, and he charged $200 on this credit card. Well, then he was slapped with a $40 over the credit limit fee, which brought his total to $240. Luckily, he wasn't late with the payment, or else he would have been hit with another fee.
Last year, $60 billion was paid to banks in interest and fees, and none of that was going to principal amount owed.
I'll tell you this, I know the money I'm spending on credit card debt. Just the debt. Not even real things, just the debt. Anyway, I know I could be spending that money on so many better things.
I've gotten stuff mailed to me to my my college address, telling me I'm already pre-approved for a credit card, and I honestly have no idea how they got my address. So, I'm smart enough not to actually go through with it, but it just makes me curious how they get my information. Yeah.
I'm a credit card user, so every time I get something, of course it gets charged onto the credit card. But when it comes out, the total I got something for is way over the total, the amount that's.
Borrowing fundamentals can help people learn how fast debt can grow. We've already covered the first borrowing fundamental. Borrowing money costs money.
You will pay for what you borrowed, and you will pay for borrowing the money.
The costs of borrowing are interest and fees. The second borrowing fundamental is the more money you borrow, the more money it will cost, because you're paying interest and fees on more money.
The third borrowing fundamental is the longer you take to pay off a loan, the more it'll cost you, because you're paying interest and fees over a longer period of time.
Let's look at $45,000 in student loans. $45,000 is the principal. This loan has a 6.8% APR. If you pay the loan in 10 years, it will cost you $62,143 to pay it off. If you take 25 years to pay off the loan, it will cost you $93,699 to pay it off.
If you're choosing the longest time period to pay back your loan, it could cost you several $1,000s more. And the same is true if you're only making minimum payments on your credit card. If you make the minimum payment or an amount less than the total you owe, you're charged interest on that balance, and that becomes part of your new balance. The same thing happens each month if you don't fully pay off the credit card. If you're making minimum payments, you're barely paying the interest that you're being charged, so the interest charge becomes part of your balance, and you're charged interest on that. It's being charged interest on interest. It's called compound interest.
Here's a specific example of compound interest. $7,500 in credit card debt with a 20% interest rate would result in a monthly finance charge of $125. That's just interest and not touching the principal amount owed, the $7,500. Let's say you don't pay the $125 finance charge. It would be added into your balance. So $7,500 plus $125 equals your new balance of $7,625. And you would now be charged interest on this amount. 20% at this amount would be $127.08 per month. So your interest and fees, by the way, becomes part of your balance, and you're charged interest on that larger balance. It's how $5,000 can turn into $25,000.
I like to point out that the credit card companies borrow the money at approximately 5% and turn around and loan it to you at 18%, 21%, 28%.
Yeah, my parents taught me a little bit about it. I mean, I think I just kind of had some sense about it. I mean, understanding that credit cards is not money. I mean, when you start from the basic understanding that you can't spend money that you don't have, and when you understand that credit cards are not actually money, it's just kind of an instant loan that is very short term in most cases. If you don't pay it off, within the month, you get crazy interest that gets heaped onto that. I think with that understanding, that's what really kept me out of any kind of super crazy consumer debt. So.
You should be aware of certain things about your credit card. I'm not saying you need to go through your credit card terms and conditions with a fine-tooth comb. There are lawyers who don't understand those things, but you should know certain things about your credit card.
You should know your credit limit so you don't go over it, and you should know your due date so you can pay on time. Your payment has to be received by the due date, not mailed.
Some credit cards have a due time, where even if your payment arrives by the due date, if it doesn't get there by the due time, you'll be charged a late fee.
Know the fees you're being charged, and know your APR, and check each bill to see if it's changed.
Different credit card transactions have different APRs. For instance, a purchase can have a different APR than a balance transfer or a cash advance, so you need to know your APRs.
Some credit cards advertise a fixed interest rate as opposed to a variable interest rate. A fixed rate stays the same, so you know how much you're paying, whereas a variable rate can rise, costing you more money. The thing about fixed credit card interest rates is that they can change. They're not fixed.
Credit cards can change your interest rate if you're late with a payment. And some credit cards can change your interest rate if you're late with a completely different credit card that's not related to them. It's called universal default. You should find out if your credit card practices that.
That happened to me too. I was late with a payment on one of my credit cards, and the interest rate shot up on that card, but also on my other card. And because of the raised interest rate, I went over my credit limit, and I got a fee for that too.
So this is what it's gotten to? Credit card companies can change your fixed interest rate for any reason, simply by providing you with written notification 15 days prior to changing the rate.
In January of 2008, Businessweek reported that Bank of America was doubling the credit card interest rate of some of its responsible customers based on no apparent deterioration in their credit scores.
Another debt detail to be aware of is double cycle billing.
Interest is being charged on debt that was paid. You can shop around for the best credit card deals. It's interesting to note, according to Consumer Reports, that some of the larger credit card issuers, including Chase, Bank of America, Citibank, and Capital One, they did not get high marks from customers. Check out Consumer Reports for issuers that keep interest rates low, fees to a minimum, and provide good customer service. Remember to not get fooled by freebies like free t-shirts or travel rewards when you're paying several times more than that in interest and fees.
I'd recommend having one credit card with a limit, say $500 or $1,000, and pay it off every month. Otherwise, you're paying to stay in debt. If you must have a balance, keep it under 35% of the credit limit. Spending more affects your credit in a bad way.
Well, a lot of people get the credit card with the excuse that it's going to build their credit. But if they use it incorrectly, it could wreck their credit.
He owes probably like $40,000, and but he didn't get a job right out the bat after college. So yeah, he was in debt. He just kept accruing, so he just kept opening credit cards over and over just to pay that off, like bank loans. Yeah, but that's about it. That's pretty bad.
I've been out of school for over a year, and the debt I've accumulated since starting college is killing me. I wondered if I was the only one, since it's not talked about. I've learned that a lot of people are in the same boat. We're not only not getting ahead because of the debt, we're barely making it, and some aren't even doing that. I didn't really have a credit card balance while I was in college, nothing I couldn't pay off soon, but I did take out some extra student loans. To get by, but also for some discretionary things. I did a lot of rationalizing. There was always something I needed for my film projects. I just always thought I would graduate, get an amazing job, and the coast would be clear.
6 months after graduation, students have to start paying back their student loans, and maybe a credit card too. And they'll be entering a world where expenses have gone up, and their incomes may not be what's expected.
See, a lot of college students, they believe that their money worries are going to be over with graduation and a job. Statistics say otherwise. Starting salaries for college grads are often not enough to make a serious dent in their debt right away. Recent graduates that are strapped, like Allison, are particularly vulnerable if something goes wrong. A loss of income, an unexpected expense like a car breakdown or a health problem.
I was scraping by, and then disaster struck. I found out I had to get my wisdom teeth removed, and my insurance plan didn't cover that. So I had to credit card it. $5,000. But I made a big choice. I decided to move back home and commute to work. Because I gotta pay more than the minimum payment on my credit card debt. And I really want to pay off my student loans faster than the 25-year plan. I mean, that's thousands of dollars I'd just be throwing away. Paying for debt. But I do wish I had borrowed less money. That would be less debt for me to pay back right now.
Imagine a red line. Below that line is debt. Credit card debt, student loan debt, auto loan debt. Above the line is wealth. Getting ahead. The idea is to get out of debt and get above the line. You want to make decisions that protect and build your financial situation and help you get ahead. You want to be careful with decisions that get you behind by creating debt. You can view all your spending and borrowing choices through that lens.
On the other hand, you don't need to be constantly thinking about maximizing wealth. I want you to follow your dreams, your passion, or your calling. But if you are overburdened by debt, you may not have that choice.
If you can't pay for it with cash, which means you don't have money for it, that means you can't afford it.
I don't know. I think that, if you really need it, if you want it for the convenience, is you can get an ATM card, and then, and also because it's on a limited account, it forces you to think about, what you're spending, and, I've got this much in the bank, and I can spend this much. It's not like, I've got this much, and, I can pay it off later.
I've listed 3 collegiate financial goals. Finish college, make a rational decision about the amount of student loan debt you take on, and limit your credit card debt.
Well, the fact that college graduates make more money than non-graduates doesn't diminish the need for you to analyze your options.
To ensure you're making a good decision, compare the cost of your education and debt with your expected future income.
You may get a loan for tuition and living expenses, but you'll also have the cost of having the loan.
Use the average federal Stafford loan interest rate of 6.8% and do a 10-year estimate and a 25-year estimate. Have your lender tell you the monthly payments for each estimate. Notice the monthly payments are lower for the longer plans, but you pay a lot more over the life of the loan.
Look online or ask your counselor for income statistics for the profession that you're considering. And when making these comparisons, avoid wild income predictions. Know that the first few years out of college, it may be a struggle with an entry-level income. And most likely after that, it will be a gradual progression. The average teenager believes that they will make over $100,000 a year. According to Census Bureau statistics, fewer than 5% of the U.S. population makes over $100,000 a year.
To save money on the cost of college, consider different universities and colleges. Notice the different prices. Explore financial aid packages. Look for grants and scholarships. You may want to work part-time while you're in school to limit the amount of debt you take on. There are studies showing that working 15 hours or less a week can actually help with time management and studies. Work during the summer. Some employers help pay for school. Your school counselor can help with this as you get closer to finding a financial aid package.
One of my friends is getting closer to senior year and everything, and then he realizes that he's going to have a pretty big loan.
Well, I mean, you see these stuff on TV, you know, and they're like, you know, you can, you know, get, you know, whatever it is, you know, $30,000 per quarter or something, and, you know, that just seems a little ridiculous to me, that anybody would want to graduate with that much debt, and I guess people just don't realize how long it would take to pay that off.
It's essential to know what you're getting into and whom you're getting into it with.
Start with the safest loans, federal loans. Interest rates on federal loans don't change over time, and they aren't affected by your credit rating. They're the cheapest, they offer the most protection, and they give you more options.
Become familiar with the details of your loan. Know the interest rate and the fees, and know how much it will cost you to pay the loan off in full.
Funding for financial aid has been cut, so more and more students will have to turn to private loans as opposed to federal loans. The interest rate in some private loans is variable and can increase, which makes your loan more expensive. You want a fixed rate loan, which means the interest rate will stay the same. If you have to get a variable interest loan, you want to know how high the interest rate can go. Some students are paying 18% or 20% on these student loans, which is quite a jump up from the Stafford loan at 6.8%. And make sure your fixed loan is really fixed.
Think about when you have to start making payments. Are there penalties for paying the loan off early? And will the loan prevent you from receiving federal student aid?
Be aware of private loans in disguise. Some schools put their own name on private loans, or some loans have names that make them sound safer than they really are. Your college may have a preferred lenders list. There's been recent scandals where lenders pay to get on these preferred lists. Now, these loans may not be the least expensive, so don't limit yourself to these preferred lists.
Get organized and keep all of your records. Save all of your correspondence and all of your loan documents.
Do not take out a bigger loan than is necessary. Apply for grants or scholarships, or look for work study or work positions to limit your debt.
I have some student loan going on. It's right now the one that I have is it's one of the subsidized federal loans. So hopefully I'm going to be able to avoid, you know, a lot of the commercial loans, because I know those are a bad deal, but you know, I don't know what my financial situation is going to be like in the future. So
all the marketing tells us to buy now, and I'm here to tell you to resist the urge and save for that purchase you want to make until you can pay for it in cash.
Here's another way saving can save you money. Save and set aside $100 to $500 for those little things we don't think about, or for an emergency. There's always those little things, like a parking ticket, a lab fee, tattoo cover-up. If you set aside a little cash, then you can pay with cash. You don't have to turn to costly mode of credit and run up your debt.
It's good to get into the habit of saving for the long term. Just a little bit can turn into a large amount over time.
Your money can also grow over time with proper investing. But remember, with investing there's always risk. And usually the higher the growth potential, the higher the risk.
You can make compound interest work for you. And the younger you start saving, the better. That's more time for the interest to grow.
plan to make sure you control your debt, to keep your debt in a box. It's a spending plan.
A spending plan will help keep you from overspending.
It's the money you have available to spend minus your expenses within a definite time period, say a month, quarter, or semester. You identify the money you have available to spend within your time frame, and with that in mind, you set limits.
When we don't set limits and spend more than we have, that creates debt.
You don't want to budget like the federal government because it spends more money than it brings in. You also don't want to budget like Enron, that exaggerated their income and lied about their expenses.
Right alongside your spending plan is keeping track of your spending. If you don't stick to your limits, your spending plan won't help.
I write a budget, and I also have online banking with my credit union, so I watch that. But I have friends who record their purchases in a spiral notebook. They list the date, how much they spent on any particular item, and then they subtract that from their account balance, so they know how much money they have left to spend.
If there's a particular category that's giving you trouble, say shopping or going out, you can set a limit for that category. Write the limit down on a piece of paper or use your computer. Let's say it's $200. Record every time you spend money in that particular category. Write down the date, what you bought, how much you spent, and with each purchase you subtract from your limit. So that when you reach $200 or whatever your limit is, when it reaches zero, your spending is done.
One of my friends uses an envelope for dinners out. He puts a set amount of cash into the envelope, and when he dines out, he takes money out of the envelope. When the cash is gone, he has reached his limit, and he cooks at home.
Be good with your money. Distinguish between wants and needs. Think about what you really need. Comparison shop and go for the best deals. Be careful of rationalizing overspending. Always know your debt level and think twice before you increase it. And to protect your budget, make sure you're properly insured.
The problem with credit cards is they can feel like they're helping you, like they're a supplement instead of a cost. Using a credit card takes from the amount of money that you have available to spend.
Let's find another one. $42, Shorties. I'll never remember going to Shorties, and I'm probably still paying it off.
Student loans can also feel like a budget supplement because they don't have to be paid off for 4 years.
Here's a good rule to live by. Make decisions based on your financial situation as it is right now, not as you imagine it to be in the future. If you live reasonably now and things don't work out exactly as you planned, then you're not in over your head.
Another way to say that is, if you live like a professional while you're in school, you'll live like a student once you've graduated. Did you know that how you use credit and loans is being recorded, and that this information will affect your ability to take out loans after graduation? It's like you're being graded. Fair Isaac Corporation, the business that creates your credit score, says there are 2 factors in determining your credit score. Making payments on time, which is why it's so important that you know your due dates, and your debt levels, which a budget can reduce or prevent.
Banks, credit unions, and other lenders look at your credit, among other things such as income, debt, and assets, when deciding whether to loan you money. Landlords and potential employers can look at your credit as well.
The credit reporting and scoring system is far from perfect. And there's privacy concerns and concerns about fairness, and some people feel like we're in the dark as to exactly how the scoring system works. And sometimes there's concerns about accuracy. If your credit report has negative, incorrect information, that will adversely affect your credit score.
I recommend checking your credit reports once a year and before any major borrowing choice. As consumers, each of us is entitled to 1 free credit report from each of the 3 credit reporting businesses every year. You can do this at annualcreditreport.com. They may try to sell you things, but you don't have to buy anything.
If debt hits the fan, please know that there are solutions. Take control and seek help. Putting off the problem will only cost you more money. So will seeking help from folks who exploit those with a financial challenge.
Spend within your means, and never take a loan if you don't have to, and just try and stay above water at all times.
Also, I think some kind of education about it would be really important, because I know a lot of people just don't have that understanding. And you know, what with the current credit crisis we're going through right now, I think a lot of that is just due to lack of education about how credit cards work and how loans in general work.
Being an engaged consumer is vital to avoiding debt issues. That means taking responsibility for your financial situation and making informed and intentional decisions.
Part of being an engaged consumer is being an active citizen. If you're bothered by some of the debt information you've heard about starting 50 yards behind the starting line, I encourage you to do something about it.
I learned you can have your name taken off all the marketing lists so you don't get all that junk mail. I brought the information. To stop the credit card solicitations, you call 1-888-5-OPT-OUT. And that stops the credit bureaus from selling your name for 2 years.
You're at a time in your life where you have a lot of choices. And I wanted you to know that the less debt you have, the more choices you have. This is what I want you to ask yourself. Ask each other. Are you going to be debt slapped? Or are you going to slap back? The choice is yours.
Being an engaged consumer is vital to avoiding debt issues. That means taking responsibility for your financial situation and making informed and intentional decisions.
Part of being an engaged consumer is being an active citizen. If you're bothered by some of the debt information you've heard about starting 50 yards behind the starting line, I encourage you to do something about it.
I learned you can have your name taken off all the marketing lists so you don't get all that junk mail. I brought the information. To stop the credit card solicitations, you call 1-888-5-OPT-OUT. And that stops the credit bureaus from selling your name for 2 years.
You're at a time in your life where you have a lot of choices. And I wanted you to know that the less debt you have, the more choices you have. This is what I want you to ask yourself. Ask each other. Are you going to be debt slapped? Or are you going to slap back? The choice is yours.